Something happened inside of my portfolio this month that genuinely surprised me. The markets only dipped a little, they barely even wobbled, but one part of my portfolio reacted like we were heading into something much bigger. And if you watched Alti this month, you already know how wild things got for certain ETFs. But what shocked me most was that my biggest reaction didn't come from a place people usually fear. It came from a part of my portfolio that's supposed to make things smoother, and instead it amplified the volatility. When I dug into why, I uncovered something about how my entire portfolio behaves under stress, and I genuinely wasn't ready for it. By the end of this video, I'll show you exactly what caused the spike, how it compared to a simple fund like XEQT, and what this tiny market pullback really revealed, as well as one major change to the portfolio. My name is Darren. I'm just a regular Canadian who started investing at 50, and I'm proving every single day that it's never too late to build wealth. So last month we ended up at $440,922. Nothing unusual, everything looked kind of stable, and then the tiny market wobble hit. And for a brief moment, this month the portfolio dropped all the way down to $429,000. That's a 2.7% dip during a pullback that wasn't even close to a correction. And that's where this story really begins for this monthly update. Now, before we keep going here, I want to take a moment to say something that I feel is so important. The support lately has been absolutely unreal. The channel's growing way faster than I ever expected, and we are creeping towards a milestone that I honestly never imagined when I uploaded that very first video. That's 10,000 subscribers. And the pace we're growing, we might actually get there a lot sooner than I actually thought. Now, if you want to be part of that push and you genuinely want to shape the community for Canadians starting later in life, just hit that subscribe because it's a free way to support the channel. Every single person who joins right now makes a real difference. So let's see how far we can push this together. This is portfolio update number 19. It's November of 2025. We're going to go over everything in the portfolio so you can see what's gone on in the last month. And like I said in my intro, there's definitely some things that were pretty interesting, and we'll talk about that a little bit later in the video after we go over the accounts, as well as I did make one pretty big change. So let's get into it. So you guys know that the last month was pretty volatile, both in my portfolio and the markets in general. And in my intro, I told you that there had been a big drop and definitely some things that changed quite a bit. So we're going to go over every part of the portfolio, the things that I normally go over so you can see what's going on and the changes that I made. And like I said, I did make one pretty big change. We'll talk about that. And then by the end of the video, I'm definitely going to go over this one big thing that I noticed in my portfolio that stood out to me the most. So let's start off with where the portfolio ended this month, because that's pretty big. So we started at $440,922, and much to my surprise, after all that volatility, the portfolio finished the month at $447,272. Now, some of that is contributions, because as you know, I'm trying to build this portfolio up with not a great deal of time. I started late in life. And I think a lot of you that are watching me now are similar to me. It seems like a lot of people are in the age bracket of 45 to 55. So you're following my journey, trying to figure out how you can do it. I do get lots of questions, which I do appreciate. I get some people emailing me. I get some people reaching out on Blossom and things like that. And I'm really happy to interact with you. Something that's important is I'm just sharing my journey. I'm by no means any financial advisor of any sorts, but I'm happy to give you some foundational answers to the way that I did things, and if that can help shape you, so be it. So let's jump into each part of the portfolio and see where things have gone this month. So just following up on the last video I told you on the month-end video that I had set a new goal when I did a little bit of tweaking as far as where I wanted the portfolio to go. So I adjusted that. It used to be a $500,000 mark is where I wanted to get to. But I changed that, and that goal is now $577,000. And so far, with even the changes that have happened and the amount of money that I've contributed, now I'm 78% of the way there. So we're really closing that gap, which is great to see. Ideally, I'd like to finish that as quickly as I can, and then the rest of it would be gravy as far as I'm concerned. Now, that doesn't mean that we're going to be set in any way, shape, or form as far as being millionaires or anything. We're just trying to be prepared for retirement when that comes around with some numbers that will really help us. Things that I wish I had done a lot earlier when I was younger that, obviously now I'm just sharing with you guys, trying to show you what I should have done back then and what I'm doing about it now. All right, so the first thing we're going to start off with is my Enriched Academy tool, which helps me plan for retirement. It's sort of the brain center of everything about our finances brought into one place, like a big calculator. So inputting all the data then tells me what things will look like in retirement. So I've updated this information with November's numbers, and it's obviously increased slightly. It wasn't a big gain, but it was enough to update everything. So as it stands today, I'll be retiring in about 8 years. That'll be the age of 60, which you can see here. And what's great about this tool is it tells me whether I'm on track, whether I'm falling short, and that's of course if I adjust numbers. So I've set an amount of money that I think we want to live off of and inputted my pension amounts. I've inputted how much we're now building in this portfolio, how much inflation will be, how much this portfolio will grow. Making some very conservative estimates. For instance, I'm only using growth at about 5% on the portfolio. Of course, it could be more than that, but then when there's downturns, it could be less than that. And we don't know how to predict that, so I think it's better for me just to sit around that 5% mark. So by the time I retire, I need $577,551 for us from this particular portfolio in addition to my pension money. At this rate of contributions, we'll have $1,071,264. That gives us a nice surplus of $493,000. Now, you might be asking yourself, why do you want to do that? Well, right now the goal is to get to that $577,000 mark. But of course, if I decide we want to change how much we're looking at in retirement or legacy, we have 2 kids, how much money may we want to leave behind for them, because you never know when things are going to change. So I'm looking at this surplus, and I can use that as a good gauge as to whether or not we can make changes to how much we might need when we get to retirement. It's a great tool. Check it out if you're interested. Enriched Academy, based in the Lower Mainland of Vancouver. It's a Canadian company. Okay, so I've always been using this online tool, Passive. It brings all of my accounts in one place, which allows me to see the performance of the entire portfolio. It is not without flaw. I've chatted with Passive in the background several times because it is a bit frustrating when I sit here in front of you guys and I tell you that I like the product, but it has some flaws. I told them it would be nice to fix some of these flaws. Unfortunately, so far they haven't been able to do any of that. But it, in combination with Wealthica, another tool that I use, allows me to still get the picture that I need. But some of you were asking me to show the WealthSimple returns or the brokerage returns right from the brokerage itself. The reason that I've been using Passive is because I have Questrade and WealthSimple. So some of the portfolio is split between the 2 brokerages, so it makes it a little hard for me to sort of show you everything. But in today's video, I will show you some of the numbers from a few of the accounts directly from WealthSimple, so you can see them from there. But Passive is nice because it does collect all the data, and once you sift out the things that don't make a lot of sense, you can still capture the data that you're looking for. So this is going to be the overall performance of the portfolio, and the first thing I need to draw your attention to are these big spikes that you see. You can see there's a new one here in November, and that's one of the things that I'm going to talk to you about in just a little bit here about what I did in the portfolio. So we can see that I've been making steady contributions, and then those big green spikes are when I've been moving a little bit of money between brokerages. So pretty steady at making those contributions, which is really key to building your portfolio, is to pick a number, whatever that number is, whether you're starting with $5, $10, $100, or whatever it is, and being consistent with that amount based on the amount of money that you're bringing into your household. Again, I like to use the 20%. Some people gave me some feedback over the last videos that I posted that, they come up with their own numbers, whether it be 30%. That's totally fine. This is not a hard and fast rule. It's just one that, I use for my investing. So you pick what you need to use, but whatever you pick, try to be as consistent and steady with it as you possibly can. So I know that the one thing that a lot of you really like to see is the distributions or dividends that the portfolio produces. And this is a nice snapshot from start to finish. So if we go all the way back to when I started in April of 2023, when I made a whopping $1, and then you can see that there's just been a steady increase in those distributions or dividends as we go along. And then in 2025, I made a change where I started introducing covered calls into the portfolio. And of course, that increased the distributions. But with those increase in distributions comes a whole other myriad of things that we're going to talk about a little bit into this video here towards after we talk about the different accounts and stuff. So this month we've made $1,121 in distributions. Now the one thing about this video that I shoot, it's right at the end of the month, and XEI pays out right at the end of the month. So generally it's not captured in this video when I do it and in these statistics. It says that we got $91 from XEI, but I have two different brokers and each of them doesn't put it into the account when the other one does. So there's a little bit more money than that. So we're averaging right now $702 every month, and to date, the entire portfolio has generated $22,000 in distributions and dividends. So not too shabby. Again, the big thing that I like to see is that we're seeing some nice growth in the portfolio as far as those go. And down at the bottom, there's a graph that allows you to look at how much each of the different funds you're holding distributes. It's no surprise that as far as distributions go or dividends, that HYLD and the other cover calls are at the top of the list because that's what they're designed to do. And of course, if you scroll down, you get into some of the other funds that I hold that are more growth oriented that don't pay as big a distribution but still grow on the other side. So as you guys know, if you've been following me for a while, if you're new, this will be a bit of an introduction for you, but there's a number of different accounts. I have my wife's spousal account. I make the contribution. She takes the money out later. We have my kids' fund that's teaching them what to do with. We have my wife's RRSP. And of course, we have my TFSA, which is really the reason I started this channel. I started building this portfolio around that particular account. And then, of course, we have my RRSP, which is really small because I have a pension. And then lastly, we have the emergency fund, which I've built up recently. And I talk about it quite a bit. It's important to have an emergency fund, but I decided to take a bit of a change, which means that I wanted to invest this money and see what would happen to it if we invested in it. Now, of course, the argument to that is that it's not liquid, and that could definitely create some challenges if I need to access that money. And like this last month, when the markets dipped, let's assume that it drops below what the original amount was. I'd be selling those shares at a loss in order to access that money. So that's one of the bigger risks. But we're going to see how this goes, and we'll talk about that account here in a little bit when we get to that part. And then, of course, I have this very small part of Bitcoin in this account portfolio as well. So we're going to go through the three different accounts that I'm making contributions to, and then we'll talk a little bit more about what's going on in each of those. So this is the month of November for my Spousal RRSP, and I mentioned to you that I had made one big change to the portfolio, and that was with this particular account. So this account was held over at Questrade, and the reason for that was that I was able to use Norbert Gambit over with Questrade, and it didn't cost me a great deal of money. It was a great way to invest in US currency, which I do think is important. But recently, WealthSimple made a big change to their platform, and they will be offering Norbert Gambit in 2026. I'm really excited to learn about that. But beyond that, WealthSimple offers a bunch of other different financial products, and one of them is a credit card. And if you know, or you follow me, or you know a little bit about finance, saving on fees is so important. If you can save on your monthly insurance every year, and you can save on subscriptions and things like that, that money adds up, because then you can turn around and invest that money. And of course, you can see that money grow rather than giving it to the company that you were utilizing. And in this case, WealthSimple offers a credit card. It's a 2% cashback credit card. Now, for the longest time, we were with TD, and did a video about that a long time ago about how TD was not really great as a big bank. When I went to them and said, look, I've been a customer for a long time, and I'd like some reduction on my monthly fees for the accounts that we hold. And one of the big parts was the credit card. Because we had a certain amount of money in our account, then of course we got the credit card for free. But as you know, if you watched that video. If you didn't, go check it out. It didn't work out. So I have been looking for a new credit card, and after doing quite a bit of research, it turns out that WealthSimple's new Infinite Visa, which is essentially the same as what we have, is going to offer many of the same benefits that this card did that we've now had to pay for the last year. So the plan is to cancel that. But in order to use this credit card, we had to maintain a certain balance with WealthSimple. Well, that was pretty easy because it all encompasses all of your portfolio as well. So I moved our Spousal RRSP from Questrade over to WealthSimple to take advantage of that. And in doing so, I've done a few things. One is I'll take advantage of the credit card. It won't cost us anything. I'll be able to get rid of the old credit card and save on fees. And then because our net worth grew, we actually have rewards within WealthSimple. And because we hit $400,000 net worth with WealthSimple, I actually get to take advantage of one more reward from them as well, which is pretty handy. And of course, when you're a premium customer, you get slightly different customer service, which I can't tell you enough. It's been so great. This transfer, a lot of people complain about transfers from various brokerages. I was just getting told a story at work the other day by someone who had a real mess of a transfer with WealthSimple. In my case, it went really well. It happened way faster than I thought. It took about 10 days, which is absolutely phenomenal. So the money's moved over, and the last part is that not only do we get to take advantage of the credit card, but we also now get to pick between a new iPhone and a MacBook Air. That's part of it. Sometimes they'll offer incentives for money for you to put into your account. In this case, they didn't do that. We're going to decide what we want to do with it, whether we want to take it and use it in the house or obviously turn around and maybe sell the thing, but we'll see how that all works out. So stay tuned to see how that works out next month. So in the Spousal RRSP now, we have $129,000 in the last month. And again, this is one of the downsides of passive. It shows that I contributed $129,000. Well, clearly I didn't do that because I transferred this money and there's no way to decipher how much it actually was. But what I do make is every week, one of the changes that I made a little while ago was instead of putting money into our mortgage, like doubling up our payments, what I did is I took that money and now I'm investing it into the Spousal RRSP because I get a tax deduction from that, as well as we can then put that money back into the portfolio and see it grow, which is a bigger percentage return than it is for paying down our mortgage. Do I want to pay down the mortgage? Of course I do. But to me, this makes a lot more sense. There's no point in doubling up on mortgage payments when I can make our money grow faster. And eventually we either downsize the house or maybe we take some money out of the portfolio at some point and we pay that part of the mortgage off. Either way, it's still growing more on the portfolio than it would if I was paying the mortgage down. Rate of return in the month was 0.68%, so it was a pretty volatile month, not a huge change in that account. This month we earned $11 in distributions, but because I just moved this account, obviously this isn't very accurate because I got way more distributions from that. So we'll have to wait. It's going to take a while for the account to start giving distributions because basically when you terminate an account at one place and move it over, passive isn't able to collect the data anymore once that account is closed. So we're kind of starting from scratch when it comes to this particular account. And that's fine with me. Like I said, the distributions and the dividends, they don't really drive me too much. It's nice to report them. I know you guys like to see them, but at the end of the day, it's not all that important for me to see the exact numbers when I'm moving money around to take advantage of other things. This is my TFSA. This is the star of the channel. This is why I started this whole adventure, was to see if I could max this thing out as quickly as I could, take advantage of the TFSA, which is an amazing account for Canadians. This account right now is sitting at $86,897. So we're closing in very quickly on maxing the account out. So this month I contributed $2,344 to this account. It's every 2 weeks when I get paid. Right now it sits at about $1,100. We obviously had to dip into our emergency fund recently. You've been following me for a bit. That was to take care of the furnace and the heat pump, which was our air conditioner. That was a pretty big hit, but we've built all that back up now. And so now that things are really well established, I can start looking at investing more money as I see fit when it's available to us. Now it's Christmas right now, so obviously there's some expenditures. Plus there's a lot of other expenditures that come along in the year. So this month I didn't really contribute a lot extra. We'll see about next month. So the net change is, as it shows here, was a bit of a drop because the markets were a bit volatile, down 0.32%. This month we averaged $266 in dividends from the account, and there's the summary of that. So 257 to be exact from this month, from everything from HHIS right down to XEI. You can see that most of these are covered calls, and one is a REIT, and one is like a dividend ETF. So not a lot, as I said, but as we grow, it will grow as well. So I told you guys that I would show you my WealthSimple side of things because some of you were asking, you don't like the passive third-party app to show you what's going on. And as I said, there are some issues with passive. But by the way, even if there are issues, I do like it, and I don't tell you guys about things that I don't use myself, and they're my genuine thoughts. So, you know, a great way to support the channel is in the video description below. I have links for all of the different referrals. So let's say you wanted to start with passive, you want to use their elite version, if you use the links, or let's say you wanted to open up a WealthSimple account because you're new to investing. If you use those links, I do get a small kickback. I'm not sponsored by anybody. Again, the reason that I don't get sponsorships right now is I do find it a little difficult to talk about funds when someone's paying me some money on the side for it. Who knows? I could change that down the road perhaps, but right now I just want you to hear my genuine thoughts about how I'm investing. And so when you guys take the time to buy me a coffee or to use the links for EQ Bank or WealthSimple, it helps support all the effort that goes into making these videos. You know, I'm trying to put one out every single week for you guys. Yeah, it's just a nice little reward for me to keep me motivated. So here we are in WealthSimple for the TFSA, and of course this data dates back to when I first opened the account back in 2023. So we can see that, you know, we started off way in April of 2023 and we slowly grew the account. It took a while for the growth to start happening, but I was making regular contributions. That's why it looks like it's little steps going up. And then you can see that it was the growth in the portfolio really started to take off. We're in a bull market, things are doing really well. And then right here in May, I decided to move money over to Questrade to take advantage of some money they were offering to transfer funds. Bit of a nightmare for sure. I don't know that I would do it again. I really like WealthSimple's platform because it's so easy to use. So obviously then we transferred a bunch of money and we kind of started from scratch. So while I moved that money over, which is the reason that I use passive, because here you can only see the amount of money that I've invested into WealthSimple at this point. So you can see from when I had made that transfer to December the 1st here, that I had made net deposits into this account of $8,946. But the rest of that portfolio, the total amount, as I showed you in passive, it's over at Questrade. So that's why I like to use passive to show you the two together. And you can see how much is actually total for the TFSA. You know, I have to keep that money at Questrade in order to take advantage of the money that they're offering me every single month. And of course, you know, more money in the portfolio is a good thing. So yeah, total deposits to date, $8,946 with the value of $17,568. So definitely some growth going on in there. One of the things about WealthSimple that's nice is you can look at the daily returns. So this is for the TFSA itself. You can see we're still dealing with some not so great days. We're down $58 on the day. For the last week, we've been up $122, and the last month down total $99.89. And then, of course, you can get an overview of what's in the account. I'm going to show you guys that, the total portfolio. I'll give you a quick overview. Okay, so Wealthica is another great tool. It brings everything together in one place, but slightly different than passive, where you can get a sort of global view with your largest holdings all the way down. And then, like for instance with VU here at the top, I can go into it and I can look at all of the different metrics about it. How much is, the share price right now? How's it performing? And then obviously I can look at each separate account to see what's in each of them. And then of course I can see what the performance is, whether it's growing or whatnot. And it's just nice because I get a nice global overview where passive gives me breakdowns. This is just a one-shot deal. I can jump in here and I can quickly look at those holdings. Generally what I like to look at in here is to see where all the red parts are. So if we scroll down, here's a good example. CNR has not been performing very well right now, at least as far as share price goes. That doesn't mean that it wouldn't take off down the road, but these are the ones that I'm looking for to see, so I can go in and figure out like where is it not performing well. So in this case, we hold this in a few different accounts, and you can see the performance of each of these is slightly different in each account depending on how many shares I hold and when I bought them and so on and so forth. But I really like this tool because, again, like I said, it gives you sort of this global idea. The other one that's not performing well, which we'll go into in a bit here, is Bitcoin as well. This is the emergency fund that I talked to you guys about. This emergency fund is me trying to experiment and see, is it beneficial to invest this money? Now, this month was definitely a good test for that. The last month when I started, I was still kind of building this up, and I'll show you the all time on this account so we get a kind of a general idea. We can see here that in August is when I started to build this up, because that's when we had paid the bill for the furnace and the heat pump. And of course, I wanted to get it up to 10,000. I chose 11,000 now. So total contributions into the account are $11,000. Now, last month, I was up about $600 on this account, but with the volatility that we saw this month, that dropped significantly. Now, it has recovered at the end of the month as things have recovered. What I want to see now is how this performs over time. I'm not going to be putting any more money into this account. It's just going to sit, and all the distributions and dividends and the growth within each. So 50% of it is in VFV and XEQT, and 50% is in covered calls. That's HHIS, HYLD, and USCL. And we're going to see how this performs, because we'll see real numbers from today forward. This will be a true test to see which is performing better, the growth or the income side. So this is a bit of an experiment, and we're going to run with this and see how it goes. So no more contributions. We'll see how it goes. Now you can see since August, we've had a steady increase in the distributions and dividends, and that's primarily coming from the covered calls. So you can see we made $15, $24, $56, and we're up to $68. So obviously each month these pay out monthly. That's when they pay out. It's usually in the first week of the month. So it's now December. So by about the 8th or 10th of December, this will be another distribution, which should look slightly larger than the one before it. And we'll just see how this goes. So just a quick look at the month itself for this account specifically. So we made net contributions of $620. That was to get it up to that $11,000 mark that I wanted. We had a net change of $516, but as you can see, that was because I put money into it. The rate of return is actually negative because the markets went down a little bit. So we actually lost some growth in that account all around from both sides of the account. The average dividends, as you saw before, about $70 a month. So the last part is just some exposure to Bitcoin. I'm investing $10 every single week into Bitcoin, and I started investing in it when it was what some would describe at its peak, and obviously it's not performing well as a whole. It's down pretty much about $20, $30 from the amount. Now, there's only $169 in here. This is kind of like me experimenting because it's something I've never invested in before. Now, I think that if we zoom out over time, we'll see this correct and eventually it'll start to grow. But that's why it's important with something that's volatile, like asset like this, is to not make it a huge part of your portfolio. I wanted some exposure. I just wanted to start putting some money into it. That's where we are right now. And as I get more comfortable with it, we may look at putting some more money into it or shift our strategy to an ETF to give us exposure rather than holding Bitcoin directly. But for now, that's what we're doing. We're holding Bitcoin directly. So I mentioned to you guys earlier in the video that something really surprised me about my portfolio, something that I thought would be protective in my portfolio and provide some consistency. and it didn't react so well. So let's dive into that right now. In order to do this, I'm going to do a side-by-side comparison of two funds that I hold in my account, both of which are highly talked about on Blossom Social. And if you don't know what Blossom Social is, it's a great place for people to get together and learn about investing. It's a Canadian company rooted here in Canada, and it's growing quite quickly. Last projections were that there were over 500,000 people using the app. The link to Blossom is in the video description below. You can find the Crazy Canuck Investor on there. Give me a follow. But also there are lots of other great people on there sharing their journeys, sharing their information. I like to affectionately refer to it as the University of Blossom or the U of Blossom. The difference is that a lot of people on there just really don't have the credentials. But there are a lot of very intelligent people on there that have such great information to share with people. I know for me, when I found it when I was a beginner, I found it very, very helpful. And now I really enjoy engaging in conversations because it really challenges me and lets me learn. So we're going to do a side-by-side comparison, like I said, using some funds that are in my account. So we're going to start off with XEQT, which is the all-in-one, very diversified ETF, very talked about on Blossom. So it started the month with a share price of $39.83, and it ended at $40.22. The rate of return on that is 0.97%, and that's without any distributions or dividends. HHIS, which is a covered call that I hold, also started at $14.13, but it ended at $13.14. That's a minus 7.1% return. Now the dividend was plus 1.91%, so the total return there is still minus 5.1%. That's a 6.07 performance gap in a 1 month period between a broad diversified ETF and a covered call ETF. And what caused it? Well, let's think about it. This was just a wobble in the market. It was only a very small correction and not even described as that. Not a correction, not a crash, not even real volatility by historical standards. This is why I said earlier, the part of my portfolio that should have been the calmest, as I saw it, was actually the loudest, which was a big surprise to me. And since covered calls make up about 12% of my portfolio, that behavior really mattered. So when you total things up this month, I contributed $4,764 across all of the accounts. Now, despite the wobble, as I described it, and despite the covered call drag, and all of that volatility that came in November, the portfolio still finished the month at $447,272, higher than last month, higher than the lowest dip that I saw as well, higher because diversification worked exactly how it's intended to work. Growth ETFs stabilized that hit. Cover calls, they definitely generate income. Those contributions, they accelerate some of the compounding, that's true. So this month was the perfect demonstration of balancing risk and reward when you're building wealth later in life. So what does that all mean? It simply means that I had talked a lot in my other videos about speculations about cover calls and how they perform. Here is some real world data that's been pulled. You can't make these numbers up. They came right from the funds themselves, and there is the proof in the pudding. Even with the distributions mixed back in, XEQT in a 1 month period still outperformed the covered calls. So it begs the question in my mind, why do I still want to hold these covered calls? I'm always very interested in what you guys have to think. Leave it in the comments. Maybe I'm not looking at this right. Maybe someone can influence my sort of view on these things, maybe not. But at the end of the day, I'm still going to keep them in the portfolio. Like I said, it's only about 12%, but this number kind of rings some alarm bells, and I might want to look at changing things in the future. Now, I talked about Blossom Social in this video, and if you need to learn more about it, you should watch this video right here.